Today's daily candle is not good, guys, because this is showing that the bears are still there and they are trying to push price through the levels of support we are saying on the channel that we can't lose if we want to see 25k going forward. What is the level we can't lose? Well, in fact, yesterday what we were saying is that we lost the golden pocket, reclaimed it with this bullish engulfing, which actually signals in itself if we can hold support the next day, we should continue up. Well, in fact, we did hold support yesterday. Can you see that we closed the daily candle above the gold box? We have some wicks on either side saying I was up there. I didn't really like being up there. And so for the remainder of the day, it started reversing and coming back down. And the momentum was trying to push price below the golden pocket, but failing to do so because we reclaimed it. Now it's having another go at trying to break the golden pocket. We are, as of now, currently below, but we still have 12 hours left. So this candle is going to carry on moving. What I would say is that any candle closes above this purple moving average over here, which is the 20, that is positive because this is maintaining our uptrend. So going forward with today's daily candle close, we need to see price closing above this 20 moving average. Now, if we scale over to the 4-hour time frame, we see our golden pocket here run into resistance of the moving averages and lost. So we're still holding this support 22,500 as well as our low 22,300. We can't lose this low. If this low is lost, this is when we get our correction. Do you understand that, guys? Yes, the 4-hour 200 is here, but you may just hit it, retest this as resistance and continue lower. Let's look at the daily time frame. Yeah, that would make sense for us to come into around the 200 and the 55 moving average. So the 200 is that white one, the 55 the orange one. So let me just get rid of this drawing now. Oh, my apologies, guys. And then we'll go back to the daily time frame now, and we can see that if we lose the 20, which we said as long as we're above, seeing candles above, we should continue up. However, a loss of this signals continuation down, which is what we just drew out on those lower time frames. So just to finish off this video, make sure you smash that like button, subscribe, as we're almost at 5,000 subscribers. I'm going to come back to this double bottom we were talking about yesterday or a couple days ago on the channel. So we had this double bottom from a couple days ago. We're saying we really need to clear this green area as it's got the moving average rejection over here. So we need to take out that high for this double bottom trade over here, and we pushed through that red zone, flipped it into a green zone. So going forward, now that we broke out and we have this bearish candlestick over here, price must now remain above the neckline of the double bottom as well as the moving averages if you do want to see continuation to the target. So let's just double check if we met the target. So luckily enough, out of the double bottom, we met the target. Now we need to try to understand, why did price go down? Well, if you've been on the channel long enough, if you're new, don't worry, I'm about to explain, but if you've been here long enough, we always say that in downtrends, double bottoms tend to either work in the short term or not at all. So in this case over here, where we keep failing to break this resistance, keep failing to break it, we're not making higher highs. So it's trying to head now in the opposite direction if it's not continuing with its uptrend. You know, the uptrend needs higher highs above this for continuation of this uptrend. If you don't have continuation of the uptrend, it's not an uptrend, it's the opposite. So it's either consolidation, which we're in, but so this is our consolidation period, correct? So we're coming to the range low and we're coming to the range highs, and we keep failing to break either direction. But with this rejection over here, failing to break the top, we're now starting this downtrend until our support, where down here we can start our uptrends. Do you understand that? Because we're now trapped in a consolidation period. So that just means sideways moving market. Not really much going on over these last weeks. There hasn't really been anything going on. We've gone up high and then we just invalidate that. So it's just basically telling us indecision is in the market, and what the market is trying to do is just give us a clearer picture. If it breaks the low, which is this green box, we know we're going lower. If we break above this red resistance, this green resistance, it should be red, my apologies. If we're breaking above this red resistance, then we are actually going to continue higher. The fact that double bottom didn't work is simply because we retested the resistance, failing to break it. This is no longer an uptrend in the short term. Our range low is here, our bottom is here, our support is here, which should be the bottom, and then we come down to there. Now it's bouncing. Okay, are we going to come back up here and reclaim this, get above and hit 25k, or are we just going to form a lower high, run into these moving averages? So this green box, unfortunately, I'm going to have to make it red again But the same thing, we need to now clear this. And as long as we're below, and you see we went above, beautiful, met the target, fell back under, unfortunately. Now we are below this again. We're not going to get that continuation upwards to the range high unless we're pushing through this. So let's make it simple. On the 4-hour time frame, let's clear that wick again, 23,150. And failing to do so is going to give us some further opportunities of breaking this low. If you want to enter a short, you'd have to wait for the break of the low, because as long as you're above it, it is still support. We should still bounce from here. It's just, will this bounce push through the moving averages, hold them as support, and head to range high? Of course, this is what we would like to see for the bulls out there, but we're not stupid. We're below the moving averages. Price should actually just run into them and continue lower. But that's what should happen, correct? But we know trading is not 100%. We need to just wait and react rather than guess, okay, guys? So let's just react to what it's going to do rather than trying to guess, oh, it's going to go down here, it's going to go up. Let's just prepare for both, and then we take what we see is given from the market. Thank you guys for tuning in. Like, subscribe, comment. Message me over on my new Twitter. It is linked underneath, LouisVibes_, if you want to take action on the course or the mentorship. Again, they are discounted till I hit 5K, and I'm also going to be doing a giveaway over there for a free course. So make sure you're following me on my Twitter, LouisVibes_. The link is down below. Please private message me there. Thank you guys.